Naspers has doubled its annual profit. That's thanks to the improved performance of its e-commerce businesses and the contribution of China's Tencent, which accounts for the bulk of earnings and revenues. The firm posted an annual consolidated e-commerce trading profit of $24 million. That compares with a loss of $435 million previously. Looking within Naspers' process, which holds the firm's international investments, has posted an 84% jump in annual core headline earnings. It too was helped by a strong performance in e-commerce operations. Commenting on the results, interim CEO Irvin Tu stated that this is the first time ever that the group's e-commerce portfolio is profitable. And reaching this goal has come quicker than expected. He added that the firm's focus will be on delivering sustained profitable growth, which Tu believes will highlight the value of the businesses over time. Invicta has posted a profit dip. The investment firm, which is chaired by Christo Visa, has reported a 4% decline in annual headline earnings per share. Nevertheless, a dividend of 105 cents has been declared. That's an increase of 5%. PPC is back in the black. The cement maker has delivered full-year headline earnings per share of 19 cents. That's from a loss of 20 cents. The swing was supported by a strong performance at the group's Zimbabwean unit, but hard work still lies ahead for the company. CEO Matthias Cardarelli highlighted the firm's difficult past in its results announcement, mentioning the group's sustained underperformance and decreasing profitability over a number of years. To address this, he believes a meaningful organizational reset and tough decisions are necessary for PPC's sustainable future. This, he says, will include refocusing the organization on its core business as it moves forward. RCL Foods is eyeing a profit jump. The maker of Oma Rusks expects annual headline earnings per share to rise 75%. That's due to gains at its groceries business. And Rainbow RCL is in the process of unbundling and separately listing Rainbow on the JSE. In light of that, the firm gave additional information on the division. It says Rainbow's second half EBITDA performance of the underlying business is expected to be broadly in line with what was achieved during the first half. RCL will release results on the 2nd of September. Ethos Capital has selected a new CEO. Anthony De Beer will take up the reins from next month. That's as current CEO Peter Hayward-Butt has tendered his resignation to the board of the investment company. Alongside this announcement, the group also provided a trading update. It says its net asset value per share for the quarter to end March rose 1.8%. This is largely thanks to the firm's unlisted portfolio. Hyprop says its performance continued to improve in the first 5 months of the year. In South Africa, the retail property owners' foot count increased 5.7%. The vacancy rate stood at 1.7%, and several refurbishments, relocations and new store openings took place across the portfolio. In Eastern Europe, foot count ticked up 0.5%, while the vacancy rate remained stable at 0.2%. The firm's Sub-Saharan Africa portfolio, however, had a tough time. Hyprop owns malls in both Nigeria and Ghana, where currency depreciation, high inflation and muted economic growth has weighed on operations. The firm says risks remain high there, but progress is being made to dispose of its investments in Sub-Saharan Africa. MC Mining CEO is stepping down. The firm says Godfrey Gomwe will relinquish the position at the end of this month. Gomwe joined MC Mining in April 2022 as a non-executive director and was subsequently appointed MD and CEO in the same month. During his tenure, MC Mining carried out a rights issue which facilitated the enhancement and progression of the studies needed to build the shovel-ready Makado project in South Africa. The company says it will provide an update on the MD and CEO position shortly. Further afield, Hyundai Motors unionized workers in South Korea voted for possible strike action after talks with the company over wage increases and an extension of the retirement age stalled. Let's take a look at this packaged report for more.
Hyundai's unionised workers in South Korea voted for possible strike action on Monday. The move comes after talks with the automaker stalled. The discussions were focused on wage rises and an extension of the retirement age. A union official told Reuters they were willing to negotiate with management if they changed their stance. The union is one of the biggest in the country with more than 43,000 members. It said almost 90% of its members had approved strike action unless Hyundai accepted its demands. If it goes ahead, it will mark the first such action in 6 years related to wage negotiations at the car maker. It could disrupt production of some popular vehicles at home, which Hyundai has been exporting to offset its slow domestic sales. The union wants a minimum basic monthly pay increase of just over $114, and performance pay equating to 30% of Hyundai's net profit for last year. It's also demanded an increase to the retirement age to 64 from 60. South Korea's rising life expectancy and inadequate retirement pension payments have led to demands to be able to work for longer. A Hyundai representative was not immediately available for comment.
And EU antitrust regulators said Apple's App Store rules breach EU tech rules known as the Digital Markets Act because they prevent app developers from steering consumers to alternative offers. Here's more in this package report.
Apple is in hot water with European authorities again. EU antitrust regulators said Monday the company's App Store conditions breached the bloc's tech rules. They accused the US tech giant of preventing app developers from steering consumers to alternative offers. It's a charge which could lead to a large fine for the iPhone maker. The accusation against Apple is the first by the European Commission under its landmark Digital Markets Act, or DMA. Those rules aim to rein in the power of big tech and ensure a level playing field for smaller rivals. EU antitrust chief Margrethe Vestager said Apple's new terms don't allow app developers to communicate freely with their end users and to conclude contracts with them. The Commission also criticised the fees charged by Apple for facilitating via the App Store the initial acquisition of a new customer by developers. Apple said it had made a number of changes over recent months to comply with the DMA and was confident its plan is in accordance with the law. The EU executive said it was also opening another investigation into Apple. That's over the firm's new contractual requirements for third-party app developers and app stores and whether these were necessary and proportionate. DMA breaches can cost companies fines as much as 10% of their global annual turnover.